So let's talk about how we can actually find winners in the emerging market space. When you guys are actively looking for winners, what are some of the characteristics that you're looking for?
It's not an easy job. Ideally, we're looking for good, durable businesses with leaders who care about shareholders, and all of that at a good price. So that would be the holy trinity of what we're looking for. Easier said than done, though. But we start looking for, and we ideally look for businesses that are overlooked or misunderstood by the broader investment community. And that obviously grants us that opportunity to buy them at an attractive price. In emerging markets specifically, we've got a big preference for family-owned or owner-operators with skin in the game, and then combined with that, little or no debt and long-term prospects.
So can you share an example in the portfolio currently that ticks those boxes?
The one good example that comes to mind is a company called Jardine Matheson.
Oh, yeah.
They're a Hong Kong-based conglomerate, one of Asia's oldest and most respected businesses. They're nearly 200 years old. Quite a colourful history, and they are, to this day, controlled and managed by the founding Keswick family. I think now it's in its fifth generation. And they've got this reputation of not thinking in years, but thinking in decades. So Jardines, in terms of what they do for a business, they are an investment holding company, and they own a collection of high quality businesses across Asia. Many of them leaders in their own field. But despite the strength of Jardines and the underlying businesses, they have been caught up in this general apathy and pessimism towards emerging markets. So the market currently values Jardines at a quite sizable discount, around sort of 30% to the sum of its underlying parts. And those underlying parts are themselves trading below intrinsic value because they're subject to the same pessimism and apathy in emerging markets. So that gap between what you pay for Jardines and what you actually get is fairly sizable. So that's quite attractive in our book. As always, there's uncertainty. You never know how things are going to play out. But this low valuation, we think, is overly pessimistic. It reflects overly pessimistic expectations. So it should bode well for future returns.